Good morning, everybody. There's a lot going on out there, so let's get to it. Well, we're having quite the run, aren't we? Almost every day, up, up, up. So there are two things I want to address today. One is kind of the why, and we're going to talk about silver here in just a minute. And then a question a lot of you are asking, and it's a legitimate question. Greg, when do we get out? It's going up so fast. I don't want it to come straight down. So let's do the first part on silver. Last week, we talked about the silver squeeze. Well, what we've got now is something called backwardation. It's a weird word, backwardation. I think we just made it up. How to explain this to you? Here's the analogy. Let's pretend you've got a 5-year CD and it's paying 5% interest. But then there's a 1-year CD, it's paying 8% interest. Well, wait, that's not right. It's backwards. This is what's happening in the silver market. There's a futures price. A future price of silver you would expect to be higher, just like a higher interest rate on a longer term CD. But we've got the opposite. What we have is the futures price is lower than the spot price. What's that telling you? What it's telling you is trust is breaking down in the system. They're saying, I don't believe that futures contract will be able to deliver the silver they say they're going to deliver. I don't want that. I want it now. Excuse me. Sorry. And I'm willing to pay the premium to get it in my hands now because I don't trust the future delivery. And I think a lot has to do with there's a run on the bank. There's a run on the bank of silver. It's leaving the Perth Mint, it's leaving the London bullion market, it's leaving the COMEX here in the United States. And these buyers, whether they're industrial buyers who need silver for their solar panels or those little dots of silver in the cell phones, or the investors who are saying, oh my gosh, I've waited so long, I better get it now before there isn't any left. We're kind of joking. We're going to call silver unobtainium because you're not going to be able to get the stuff. So that's what's going on with silver right now. And if you really dig into the numbers, and I didn't do this, I'd love to take credit for it, but there's some guy named Vince who is a silver wonk who's gotten into these contracts and he's saying, if you look at these futures contracts and you look at what's happening right now, what they're predicting is we have a silver shortage out through 2027. Wait a minute, 2027? What does that mean? If he's right, big caveat there, if he's right, the wind is at our back in silver for all of 2026. You probably don't want to get out right now. So that's number one. Number two, when do we get out? So please know, Walt and I are not a slave to orthodoxy. We are willing to sell all of this stuff, but you don't want to sell too early. So do we have a discipline? Yes. And what I'm about to show you is going to look like something of a ransom note, but I actually have it's a spreadsheet that I use, and it's me talking to myself. When to exit gold and commodity funds matrix. Greg, are these indicators in place? Yes or no? Yes equals sell, no equals hold. Here it is. Now, this is our secret recipe. I am not going to give away the secret recipe. I'm like Colonel Sanders. You just don't do that. But I've got like, I don't know, 30 different things that I look at about once a week, sometimes twice a week, saying, historically, where does this line up? And you can kind of see on this first page, if I can get back to it, some will be social signs, some are political signs, but then we get down to ratios and technicals. And that's almost all the X's are ratios and technicals that go back 100, 120 years. What do they tell me? Of all of these 30, I have one X that's in the sell category. One. I'm not going to get you out on one X. As these ratios start to change, as the political signs start to change, the social signs start to change, I'll be moving the X's over. So will Walt. And we'll be saying, all right, this is starting to get a little frothy over here in commodity and gold land. Maybe it's time to lighten our position. And as more X's move over, get more out, more out, more out. The goal is on a chart, when it's going straight up, sell it, but not all at once. We're not going to pick the top. Nobody does that perfectly. But please know we have a discipline. We do not want to get you out too early. This thing's, I think I said it last week, this thing's got some legs. So for those of you who are thinking, is it time to get out? I was trying to figure out the psychology of this, and I'll end on this part. I think most of us have a little bit of PTSD from investing. If you were around during .com, you watched it go up, 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 up. All of you Intel investors out there here in Rio Rancho and Albuquerque, you watched it go straight up. We're going to be rich. And down she went. For some of you, it was the housing crisis back in 2006, 7, 8. It's going up, 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 up. Down she went. For some of you, it might have been Bitcoin, which right now is doing well, but you've seen it go up and down and up and down. For you to have a little bit of stress over something going up right now, I get it. And I've lived through it too. Walt has lived through it. If we stick to the discipline, you won't sell too early, but also I believe we won't sell too late. So with that, I'll turn it over to Walt.